Welcome back, everybody. We got more earnings ahead, lots of them. We're going to look at Visa, Boeing, and Hilton in today's earnings exchange. And here to do it is Lee Munson, Portfolio Wealth Advisors President and CIO. Lee, welcome. Good as always to see you. We're going to start off with Visa. Shares currently on a 4-week losing streak. Consumer spending, higher rates, alternative payment platforms are what's in focus here. How would you play Visa right now, Lee?
You know, I wouldn't. It's sort of lagging the S&P. It's a market perform. I think the game here, certainly there's information. Buybacks are great. Dividends are great. We understand the competition. Visa is doing a lot of infrastructure, building out in Mexico for payments. They just did an acquisition in Brazil. But when I see that, going international and trying to acquire, I get nervous. The problem with Visa is that everybody's waiting to see if management doubles down on guidance that's going to lead them to high double digits revenue growth for the rest of the year. Outside of that, you've got something with a 25 plus forward PE, and there's not a lot of, let's say, news that's going to spark this stock up. I think, to be fair, it's amazing that a company this size can produce revenue growth the way they can. I would just say, I hate when analysts say this, market perform. I'd rather buy an index fund.
All right, let's move on to Boeing, down more than 30% this year. Troubled company, troubled stock. This report is going to reveal the impact of that Alaska Air door plug blowout. Barclays watching the fallout, including regulation on MAX production and CEO Dave Calhoun's planned departure at the end of the year. Lots and lots of moving parts, literally here. What would you do with Boeing?
Not to mention, Tyler, that on Monday, one of the high-up executives said that we're going to have a problem on the Dreamliner because there's a couple parts they need to complete. So we're not just in 737 MAX territory. We have the Dreamliner that, they can't push out. Here's my issue. Last 2 years, they've been hitting about 500 planes delivered per year. Last year, about 525, year before 480. They don't even think that they're going to be able to do 350 planes this year. I think this is a value trap, number one. Let's say we got over the 737 problem. You have the best environment in the world this decade, not this year, not next year, this decade in aerospace, and it's heartbreaking to see a great American company not being able to execute. I feel this is a value trap. I'd rather buy it next year when I actually see planes getting delivered, and hopefully Airbus doesn't eat their lunch between now and then.
All right, let's pause for just a moment and remind you that Boeing CEO Dave Calhoun, soon to depart there, as Lee mentioned, is going to join Squawk on the Street to discuss the company's results. That's tomorrow in the 9 p.m. Eastern hour. It is a CNBC exclusive. You do not want to miss that. And finally, Lee, let's move on to Hilton. Shares on pace to snap a 7-month streak of gains. Mizuho expecting softer revenue per available room. That's ARPU, I think is what they call it. But noting Hilton's exposure to higher income travelers and the Asia-Pacific region as catalysts as the travel trend continues. What do you like or dislike about Hilton, Lee?
All that news is out there about the return of high-end travel. I find this is a fascinating stock. They just did this acquisition of graduate hotels, and what it is these little hotels that are around major universities, right? Boring. It's like a Peter Lynch chatbot is chirping in my ear saying, do you have a company that has something boring and profitable going on? I don't think this is about the return of business travel or high end. I think this is about over 500 units that they're going to be adding to their 7,500 units that they have right now of these properties that are going to be moneymakers. Also, they're delving into the lower end, which Hilton hasn't done before, with their Spark line that's just started, and their Live Smart, which is sort of like a extended worker, housing and all that. So I think a lot of the great things about Hilton coming down have nothing to do with what Mizuho is talking about. I think it's about this lower end that they've never tapped. It's going to happen.
Love the graduate hotels. Stayed in several of them. I think they're a good brand, good value proposition. Lee Munson, thanks very much. Lee is with Portfolio Wealth Advisors, and that does it for the exchange. Power Lunch is next.